What's up YouTube? My name is Uncle Smokey, and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say, I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt, and do your own DD. What's going on, guys? So, sorry about the bad video on Friday. I was really flustered. I had a lot of things going on with this whole update that came through from Meta Materials. And again, I just want to stress it's exactly what it was. It was an update. In fact, if you look at the stock chart overall, it even didn't really move much after that came out. The overall stock did not move much. Now, as far as it goes to the MMTLP, it does seem like that had quite the sell-off yesterday, and I've got my own suspicions on why that is. I don't think that has entirely to do with the market in any way. In fact, I do think that might have to do with the fact that they've been trying to work through getting this all handled and situated. I'm very interested to see what goes on with MMTLP in the very near future. I have a feeling its days are numbered. On to Meta, though. Let's talk about MMAT. So, on Friday, we got massively attacked by the shorts. And yes, this was definite short attacks. And the reason why I say that is because it happened just before the meeting. The biggest part of our drop happened from the open all the way up until the meeting began. There was nothing bad that happened during the meeting, even though during the meeting and shortly after there was a sell-off. Now, I will tell you that there were a lot of positions closed on Friday. There was a lot of retail investors that were fed up with the stock, and I don't know why, but they were. And that did contribute to the sell-off that you've seen after the meeting. I can almost guarantee that. I don't want to call that hedge fund manipulation. I'm sure there was some shorting and there was some profit taking and whatnot going on there. There was people that were in here at 280 and they saw that this was coming down and they said, screw it, I'm going to get out while I can, while I'm still in the profits. So you probably saw some of that. Now, you'll also notice that right at noon, we saw that amazing bounce. Again, I do find it suspicious that things happen right on the minute, especially during a lunch hour. Generally, lunch hour is a downturn or a consolidation period, but we actually saw a spike, almost a buy, right at noon. So I'm curious to see what that was. Perhaps that was big investment buying. It could have been insider buying. A toot could have came in and bought. Who knows? But I can't wait to find out what that was, and we should know hopefully soon, because that was some pretty decent volume pushing in there. Now, I do want to say, we had a little over 9 million in volume on Friday, and unfortunately, a lot of that was downward pressure, but not all of it. Also, I want to say, after this nice little push, we had some great consolidation across the $3.20 mark. Pushing back up towards 325. In fact, we double topped at 325 there before it did start coming down in the after hours. Now, we always say take after hours with a grain of salt, and I'm going to continue to say that today. The movement in the after hours is on very small volume. There's not much there. In all honesty, a lot of the stuff that's been happening the last couple days, it's just tricks, man. It's just tricks trying to shove you out, trying to get you out of here. In fact, let's pull out to a longer time frame, as my computer takes slow as always, and look how well we're respecting this channel, this downward channel. Now, I'm not excited to say that we're respecting the channel. I'm sorry if my excitement's not real high, guys. I can hear it in my voice. I've been decorating my house all day. I did Christmas decorations, and I'm cold, and I'm tired, and the excitement's just not there. But it's okay. Anywho, we got to get this video out to you guys. You guys are eager to hear what we have to say. So, on with the show. Anyhow, as you can tell, it is completely respecting this channel. These lines haven't moved. The technicals haven't changed. This, to me, is screaming manipulation. You don't see this perfect of a downward drop without there being heavy manipulation involved in this kind of movement. I mean, this is almost perfect. Pulling it all the way out to the 1 day. Look at that. We'll zoom in so you can really see it. Look at that. Perfect channel. Almost never pulls out of it. Also, I'm adding an indicator to my chart. This is the OBV. Now, I'm still learning how to use this, and we're going to go through that journey together a little bit. The OBV is called the on-balance volume. And from what I understand about the on-balance volume is it takes the volume of each day and adds or subtracts to it. And if the uptick was a heavy volume day, it's going to create a heavy lift. So if you look back here on the OBV, right here, where it went from 280 all the way up this big run up, that was heavy volume for several days, causing this big lift. And every single day it was a green candle, it added to the volume. But look, every time there was a red one, it dropped it a little bit. So red, drop, and that was a heavy volume drop. But if it's not heavy volume, it doesn't make a big difference. And here's what I want to I'm going to zoom in so you can really see that. Big volume on this day, that was 39 million, right? Nice big upward pressure. Look at this day. This was the very next day, 89 million. But it shows it's a red candle. It was still a green day, but we ended on a red candle. But the volume shows red. But we still went up because it was still green volume. It's still buying volume. But we come over here a couple more days. This was actually, probably should have been a red day. It was light volume though, but it did push it down, but not a lot. Heavy volume pushes up. Light volume does not push down that much or push up that much. If you go to light volume day, look right here. Here's a light volume green day. It didn't really do much, right? But the next couple of days, let's see here. So we had 11 there, 21, 14. So 11, 21, it pushed down hard. 14 just continued it out. The very next day, we had 12 million in volume, didn't go up a whole lot. But the next day after that, 36 million in volume, it went up quite substantially. What I'm getting at with all of this, just trying to give you good examples on all of how the OBV actually moves, is if you come over here and look at this, look at where this downtrend really started. We have barely gone down on this downtrend, according to the OBV. The volume has been light. It has been manipulative volume. It has been hedge fund volume. We're all still long and strong. We're all holding. There hasn't been very big retail investor selling, and I have said this in the past. I'm going to reiterate this again. We retail investors are ants. We do not have the power, the ability to move the market, to move a stock the way this thing has moved, unless we were to do it in absolute unison. I did play a video, and I'm going to include that video in this one again, so it's going to make this video long, about Kramer and talking about the way that the hedge funds can move a stock by pumping their money into it. 5, 10, 15, 20 million dollars they can shove into a stock and make it move the way they want it to move, and do it on a regular basis. Basically creating fear in that stock, trying to make it seem like it's not worth it. And unfortunately, they've had a little bit of help from Fintel lately. And I think they're helping them some more recently. And I'm not even going to show much of their data today, because I've got an email out there again. I still haven't gotten a response from my last one. But they've got the shares all jacked up again. The insider trading shares. We'll go to that later. I'll still show you. Not a big deal. We'll go to it later. Anyhow, so if you'll notice, the OBV has barely come down. And the one time it did spike was on this green day here. And that really wasn't a heavy volume green day. It was only less than 9 million in volume, so it wasn't a heavy lift. We had the similar volume Friday, and it did give it a little bit of a push, because that was a heavier red volume than what we have seen in recent days. But again, we're still at a very comfortable level according to the OBV. Just a new indicator that I'm trying to learn. All right, so let's toss up our other indicators. MACD, RSI. All right, so again, our RSI is still sitting in the oversold area. We're sitting right at 25, and the MACD is currently pushing down. Histogram is sitting about level with the days prior. Looks like for about the last 3 days, we've actually held on the histogram. Yeah, that's all I want to show you on this chart. Not much really to talk about. In all honesty, the movement that we saw on Friday after the major short attack wasn't really all that bad. It was kind of just movement of the stock. We'll go back to that 1 minute chart. If you look at it, I would have handled this for a daily movement as far as it goes overall. If you would have subtracted from 8 a.m. until we'll call it 10:30, that first hour and a half, the hedge fund push after a day of crazy weird consolidation where they were able to increase the liquidity, where they were able to put money back into themselves to be able to do something like this, to say, ha ha, got you again. All right. Again, I think this was absolute manipulation. It's a hedge fund tactic to scare people out of their stock. There's great things happening with Meta. They are in absolute trouble, just like they are on many, many, many stocks. There are so many stocks that these hedge funds are absolutely in trouble with, and they are doing the same things to those stocks. I mean, go look at AMC, go look at GME, go look at BB, go look at Prog, go look at BBIG. No, you know what? Don't go look at BBIG. Screw them. And I still hold, by the way. There's so many stocks that have been absolutely manipulated by the hedge funds. And the proof's out there. If you guys doubt me now, go watch any other video, any other trader video that they talk about these meme stocks, Trace Trades, him especially. That guy is probably the king of all apes, and he can break it down better than anybody. Matt Kors, let's not talk about AMC, Hoot Money, who's that Jason guy? There's so many YouTubers out there that have talked about the manipulation in the market, and they've shown you prime examples, and I've been able to show you prime examples time and time again as well. We see it all the time, and this last 2 to 3 weeks worth of downward pressure, that has been absolute manipulation by the hedge funds, because there's nobody here selling, and I'm absolutely confident about that. Options chain. So the options chain was a little bit crazy on Friday, and to be expected. So there were a lot of puts bought and a lot of calls bought. And again, if you remember, on my previous video, Kramer had said they'll go in and they will buy a boatload of puts to try and show that there is something going down. And that is one of the things that could have absolutely happened, is there could have been a large put purchase or several large put purchases done by several different or one hedge fund to create the sense of or the illusion of downward pressure in the options chain. However, what you do need to look at is we still doubled that in calls. So it was still a very bullish options chain. Good luck, Hedgies. I think the vast majority of the meta holders know what they hold. The ones that kind of got in recently, you guys need to get up to date. Watch some videos. Watch me. Watch Sterling. Watch Terry. Watch Pidge. Watch. The Pidge does a lot with the divvy. She's not going to cover what actual Meta does. She does what the oil and gas asset deals with the oil and gas assets and deals with the dividend. But she's still got great education on her channel. But there's also Ollie. There's I don't know. There's several of these guys out here that are educating people about Meta, and not to mention Meta Materials Inc. has their own YouTube channel that you can go to and look at all their videos and get educated about their information. So all of you new investors out there that have been recently investing into Meta and you would like to know what you hold, go check them out. Meta Materials Inc. has a great video selection that you can see all their stuff. And just to let everybody else know about this whole entire dividend thing and the letter that came out, the update that came out, I'm going to push right over to that right now since we're talking about it and we have new investors that we're talking to as well, because I know you're out there and I know you're listening. We'll come back to this right here. All right, so here's the update. Basically stating the oil and gas assets and the planned sale or spin out of these assets and benefits of Series A. Blah, 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 blah. All right, so I'm not going to read the whole thing. I never do that. I said do. I know. Thanks for making me laugh, by the way, guys, on Friday. I was reading my comments, and that was really cheering me up. It was all over the place. Anyway, what they basically said in this is that they're coming close to the end of the expiration date for the oil and gas asset lease sale. And they have created the Oil Co., which they had done on August 31st. It was introduced, and they're going through the process of getting the assets set up to be able to push over to the spin out or spin off. They are the same thing. And they are just informing the retail investors and everybody else out there that holds the special series preferred A dividend shares that things are moving along, not exactly as originally planned, but this is plan B as of right now. And now it also doesn't mean that they aren't still selling the assets. We could still see just a dividend. There's still like 3 weeks to go before they absolutely have to do this. Now, it also states in here that they've got management specifically for that, and that is absolutely normal. In fact, right over here is the spinoff definition. When a company creates a new independent company by selling or distributing new shares of an existing business, this is called a spinoff. It is a type of divestiture. A company creates a spinoff expecting that it will be worth more as an independent entity. A spinoff is also known as a spin out or starburst. Spinoffs are also done for the sale of an asset and things like that. And there's more to this. And again, Investopedia.com. I will absolutely have a link to this in the description of my video, and go in there and read all about it. It'll tell you what a spinoff is, understanding them. It even gives you an example. What I ultimately want to know is when this spinoff happens and these Oilco shares get distributed. Anyway, I guess that doesn't matter. Correct me. When that happens, will it be private shares where they can't be traded, basically locking the short positions from Torch into an inescapable trap? Or will it become a publicly traded dividend share where it would then go to the open market and then they could start trading it, much like several others, and yes, I'll say it, even such as the OSTK squeeze, but differently. The trading of it would be a similar situation, but that was a crypto dividend, and again, I don't compare those. To me, they're not the same, but I can use that as an example. I do believe Pigeon's using the Dr. Pepper one. That could be used as an example as well. That was actually a really high dividend that was produced. I would love to see that 100, and I think it was like 10 or 5 or something like that, 100, whatever it was, dividend. But that's ultimately what I want to know. Is it going to be a private where it locks the shorts into their position where they have to wait until all the assets are sold and they're just stuck there? Or will it be a tradable one? I don't know. Or will it be multiple dividends where then the shorts have to just keep giving you a payment over and over and over again? I'd like that too. That'd be pretty freaking sweet. So anyway, I'm not worried in the least. I'm long and strong. You've heard that a lot from both of us, all of us really. We are going to be holding this stock for a very long time, guys, and it's not because of bad things. It's because of good things. This company is going to go a long way. Look at Tesla. It's been years, but they're at $1,000. But it's taken them years. It doesn't happen overnight. This is not a get rich quick game. This is a get rich over a long length of period of time game. If you want to get rich quick, start day trading and cross your fingers. Okay, back over to the other stuff. Back to the technicals. Ortex, you know what? Give me a second. I need to go get a drink. All right, so the technicals. Now, we're going to go through Ortex really good. Utilization is sitting at 91.63%. It is up from 2 days before Friday. So that was Wednesday's numbers. We've still got to get Thursday's numbers and Friday's numbers. Tomorrow we will see Thursday's numbers. And it is going to be, I will be willing to bet, significantly higher. We have been seeing a lot of shorting going on. Now, another thing I want to tell you about is how short ladder attacks can happen. So a short ladder attack is actually a relatively new thing. The terminology didn't really exist until about a year, 2 years ago with the whole GME thing. It's not that they didn't exist. It was just a term that wasn't used. This is a new term as of a couple years ago. But what it is a short ladder attack can happen when a hedge fund trades within itself, basically buying and selling its own shares. And a lot of times those shares are synthetic shares. They're not even real shares. They're borrowed shares. And that's where this number is coming into play. So we have currently 37 million shares on loan, but only 22 million of those shares on loan are shorted shares. That means there is currently 15 million shares on loan that can be traded within themselves to short ladder attack a stock. Okay. Now, current cost to borrow is 2.39%, and it would take 3 days to cover all of these shares on loan. And that is the reason why this number keeps going up, because if they keep trading these within themselves, creating synthetic shares, it's going to take even longer for these shares to be covered. because now they're having to cover their fake shares as well. So when this number doesn't go up astronomical amounts, but this starts going up a lot, it's because they're creating synthetic shares, and they can't count synthetic shares because they're not real. All right, the free float percentage on loan is 26.78%. Now, once all of this updates here in a couple of days, I'll be willing to bet this goes up more closer to the actual 25 to 27 million range. That's just my estimate, my guess. The current average number of days on loan is sitting at 24.24 days, but that is as of the 2nd. We'll know more in the morning. This is Friday's numbers, guys. That was a flat day when it comes right down to it. And again, they don't need to borrow shares. They've got them. They didn't need to make it look like they were doing anything. They absolutely did not. It's a tactic. Why are we going to go and show you that we're borrowing the shares? We already got the shares to borrow. We already have them. We don't need to do that. That's kind of what you're seeing right there. However, you will notice that the estimated current short interest is 24 million, and that is 17.5% of the free float. All right, so I think I explained really well on how hedge funds can utilize the shares they have that are not already shorted into the market to short a stock. Algorithmic trading, guys. That's how that works. All right, so I'm not going to spend a lot of time with Fintel because they're pissing me off. And I'm going to show you why. 76 out of 100 on their short squeeze score. Currently showing 550,000 shares available to be lent from a leading prime brokerage. And the short borrow fee rate is currently 1.87%. The FINRA on Friday showed 62, almost 63% of the overall FINRA volume was short volume. Now remember, that's just the dark pool, just the dark side of things, right? And it's one of them. The overall was 65, we'll call it 65%. And again, not every single exchange. If we go to this one here, we've gone through that. We're getting there quickly. This is what FINRA is consisted of, right? No, that's not right. That's right. Okay. This is what it is. Here's your off-exchange TRF. They're calling it mostly retail. And if you look at your mostly retail, it's actually your hedge funds right here. And then you've got your dark pools right in here. This is all of the other on-exchanges, okay? You don't see all of this short data in here because this is the shorts that you and I would do. This is me and you, the average investor, maybe some small itty-bitty hedge funds, the ones that, as Kramer would say, don't know better or don't know anything. You would see those guys in here. They're not going to fall into these big guys. They're not the big ones. So you don't even know what this number is. We could be closer to 70% and not even know. That's not reported except for once every couple of weeks. All right. Now, why am I pissed off with Fintel? Let's go all the way up here. Let's go to insiders. Let's go look at the insider trades. Now, I keep saying that they're updating their website on a regular basis. They're doing a really good job at it. Well, I don't think that they're doing that great of a job right now, and I'm sorry to say it. We already know that this is incorrect. Georgios Palikaris does not have 3 million shares. Neither does his wife. They have 22 million shares. So see here, it shows this, and we know this. In fact, if we go to Meta, we'll do it. I'm sorry, this is going to take just a second. Investors, financials and filings. Oh, I don't even have to go through that. I'm right there. I'm just being dumb. Go down here. Right here. Here's his Form 4 from the other day when he did his exchange where he had to sell a few and buy a bunch. Look at that. 22, call it 23 million right there. We know that is the number. Fintel does not show that number. They're showing 3 million shares. They're not including the Lambda Guard stuff. That's bullshit. Okay? That is absolutely Nadine and George. That is accounted for in their shares. So, with that being said, that's what I've got for you guys today. I hope I did a lot of explanation for you. I hope you guys understand that a spin-off and a spin-out, they're basically the same exact thing. Well, basically, they are the same exact thing. It's just different terminology. And I hope I also helped explain to you how a hedge fund can drive a stock down by trading within itself and do more algorithmic trading. If you guys got any questions, feel free to toss them into the comments below. I will try to answer them the best I can in my next videos, upcoming videos, and over Twitter. I'm sorry to anybody for Facebook. I try my best with all of the stuff. Twitter is my main site. Facebook is kind of a secondary thing. I'm still trying to grasp it all. So there is a metamaterial site that is out there. If anybody would like to join it, they're a great group of guys and gals, sorry. And they spread a lot of great DD. They're very, very bullish on the stock, and they'll tell you that. They've got a lot of information on their site. So it's Metamaterials Inc. I'm going to put a link to the description of it in my video, so make sure you go check it out. I am a member. I go in and see it every now and then. I don't comment a whole lot, and I am sorry. So anyway, there's a video at the end of this if you want to watch it. Peace.
Economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures pointing to an up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right?
And it is a very quick way to make money and very satisfying.
Okay.
By the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than when you were managing your hedge fund.
Right.
Do you think does that exacerbate the moves, or does it make it tougher?
Well, you know, the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation of
Ferment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning where I would be buying the Qs and stuff.
Right.
This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment, if I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today. So, you know, you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research in motion. So we're seeing that. That's, you know, again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
Okay. Another stock that a lot of people are focused on right now seems to be Apple.
Yeah, Apple's very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone.
Right.
That's a very easy one to do because it's also you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that story. and you can claim that it's credible because you spoke to someone at Apple, because Apple doesn't
Right, they're
issue
not going
any
to comment.
statements.
They're not going to
Right,
say.
so it's really an ideal short. And I would, again, if I were short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone, you call 6 trading desks, and you say, listen, I just got off the phone with my contact at Verizon, and he has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down.
Right.
I might also, by the way, because the stock at 84, 85, with a little bit of capital, you go buy some January 80 puts that makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts, then you go position limit with you use a firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts. And you just kind of create an image that there's going to be news next week, and that's going to frighten everybody.
Right.
Then they all go out and say large put buyer, UBS. And then they call Pisani again. You have to use those guys and say, listen, I see a big buyer of puts, and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
Right, and nobody else talks about it
Right,
except
but
you.
what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view
Right.
that it's important to create a new truth, to develop a fiction. And the fiction is developed by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So
Right.
what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions?
So you're talking about the mechanics of the market.
Well, mechanics are much more important than the fundamentals.
Well, okay, but in terms of the fundamentals, you've been writing about how you
Who cares
think.
about the fundamentals? Research in motion just blew out the quarter.
Right.
But look what people can do. I realize that every people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard was a lie. But then again, Fannie Mae lied about their earnings for $6 billion. So,
Right, and Bristol Myers lied.
it's just fiction
Yeah.
and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. And it can be played. You pay for 1% or 2.
Right, and then do you get long before Macworld and the expectation that the
Well, yeah, because
iPhone
you
is going
drove
to
it
be good?
down.
Right, and then you go back
You
flip to the
certainly
long
got to
side.
use the other side.
Interesting.
Yeah, and there's a case where I would say the January 80 puts can be justified because after I've knocked the stock down to 80, I can buy a lot of common. And then you play it right into Macworld where they'll probably introduce the phone and Verizon's going to take it.
Okay. Well, maybe the fundamentals don't